Welcome to another episode on the trades you missed last week. But if you're just joining us on this episode, this is where we backtest our Gbpusd every week. So our previous trades that we missed, we'll come here to backtest it and see how the strategy works for us for the following week. On our previous episode, we were anticipating that price would tap into this fair value gap here, because on Friday last week there was a fair value gap here. As you can see, this is a fair value gap here, so we highlight it being our supply area. This fair value gap here, price reacted to it here. So after price reacted to it on Friday, there was a fair value gap here. You know, we always look at how price takes out our previous low, that is our break of market structure. There was a break of market structure here. You see, price tapped into this fair value gap, now breaks this structure, and there is a fair value gap here. So this fair value gap was what we cited, and we were anticipating that price would give us a bearish move, that is a move to the downside, just like this. We'll put our stop loss right above this high that created this fair value gap, and you can see how price reacted to it here. Price reacted to it, and the next thing is our next low. This is the low we should be looking at. Every swing low or swing high should be our take profit. So now this is a risk reward of 4.41. So this was what we were looking at last week, just like this. Price comes down, comes up, then goes to our take profit. So that was basically what we were looking for on our previous episode. So the next one, let's take this one out. There was a fair value gap here. So this fair value gap, as we all know, we should look at fair value gap and how price could react to it. So there's a fair value gap here. Let's take this like this. Fair value gap here. And we'll have to go to our smaller time frame, which is our 5 minutes or 3 minutes. Now we are on our 3 minute time frame. As you can see, we are on our 3 minute time frame, and we have a fair value gap here, and before that fair value gap there was a break of market structure here. You can see this low here, price passed through this low and give us a fair value gap here. So this fair value gap is what we'll be using as our entry here. So at the start of this gap is our entry. Remember, price had once tapped into a fair value gap here. As you can see, a gap here. The next thing is our break of market structure and a fair value gap on site for our bearish entry. So this would be our number 2 trade on Mondays, on Monday morning, and this would have given us a risk reward of 3.8. If we are going to use this low here, this would have given us a risk reward of 3.9. using this low, about 3.9 risk to reward ratio, and you can see how price rally to the downside. If you extend this to this spot here, it should have given you a risk reward of 8.54 for your second trade on Monday. So let's move on to the number 3 trade. Let's go back to our high time frame, which is our 15-minute time frame, to have a clearer look. So you can see on our 15-minute time frame, it is better to have a more flexible system of looking at your time frames. Now we are on our 15-minute time frame here. So you can see our 15-minute time frame, we have a tap into a fair value gap here. Let's check where this fair value gap is. Now you can see this fair value gap here. there's a fair value gap right here. So price tapped into this fair value gap. The next thing is a break of market structure right here. You can see how price closed above this high here. So the next thing we'd look for is a fair value gap as usual. So now we've cited a fair value gap here. This is a fair value gap here. So we take it like this, and we anticipate that price will tap into this fair value gap and rally to the upside. Let's take our long position from this fair value gap down to the low that created our fair value gap is where we'll put our stop loss, and our take profit should be at a previous high right here. This would have given you a risk reward of 4.42 for this entry, and that was our trade number 3. Now moving forward, we could see that there is a fair value gap here also, because price tap into a fair value gap here, and now we have a break of market structure at this spot. Let me take this one to this side. Now there is a break of market structure here, and remember price has tapped into this fair value gap here. There's a break of market structure and also a fair value gap here. So this is why this is being highlighted here. So this other fair value gap is where we will set our entry for a bullish trade. Let's put our entry here, and our stop loss should be at this previous low here. Then take profits could be at this high, giving you a risk reward of 3.56, or our overall high for a risk reward of 10.63, like this. So this is giving you a much more bigger risk to reward ratio. So let's move on. Moving on, while this trade is still running, there's a fair value gap here. You can see this fair value gap and a breaker behind it here. You can see this breaker. So now we would be expecting price to create a break of market structure and a fair value gap here. So let's move on to our smaller time frame, which is possibly our 3-minute time frame. So now we are on our 3-minute time frame. As you can see, remember this breaker and remember this fair value gap. There was a fair value gap here. It can still be cited here, and price just rallied to the upside and created for us a fair value gap here after our break of market structure cited. Now this will be our entry for a long position. This would be our entry for a bullish trade. This will be our stop loss, and this is our entry, and our take profit should be that same overall high we are anticipating that price would reach. This would have given us a risk reward of 14.07 risk to reward ratio. As you can see, price is still moving bullish. Let's move on to our trade number 6. Still moving on our 3-minute time frame, we could see a tap into this fair value gap here. You see this fair value gap here and a break of market structure here. After price tapped into this fair value gap here, it created a fair value gap at this spot. So this is our continuation entry for our bullish trade. Now this is how we'll take it, and our take profit should be at this previous high. This should be our take profit here, giving you a result of about 2.24. So let's take this one out to see our actual number 6 trade. So we have a fair value gap here on our 3-minute time frame. Still, let's highlight it here like this. Because price once tapped into this fair value gap and created a break of market structure here, we'll be waiting for our entry right here, like a long position here. Our stop loss should be at this low here. This previous low is where our stop loss should be. Our take profit should be at this high here. This high should be your take profit, giving you a risk to reward of 3.76. You can see how price rallied to the upside, but you shouldn't be greedy and stick to the plan here. So the next one is a bearish trade, which is our number 7 trade. Still on our 3-minute time frame. You can see how price tapped into this fair value gap here. This is a whole fair value gap price tapped into, like this, and created a break of market structure here. The next thing we'll be looking for is a fair value gap after that break of market structure for our entry. Here we have it for a short position here. From this spot we have a short position, and we'll put our stop loss right above this previous high, and our take profit be at a previous low here. This is where we'll put our take profits. You can see this is a risk to reward of 3.75, and that was our number 7 trade. Now let's move on to our number 8 trade. Our number 8 trade goes like so. We have a fair value gap here. After we sight this fair value gap here, you see how price reacted from this fair value gap and created for us another fair value gap here and a break of market structure right here on our 3-minute time frame still. Now this is a bullish trade. For a long position, we put our entry here, and our stop loss should be right below this low that created that fair value gap, and our take profits at this. You can put it at this fair value gap here. This should be your take profits, and still this price would have given you a take profit of about 5.26 risk to reward ratio. So the next one we have is our number 9 trade. So on number 9 trade, for a clearer view, on our 15-minute time frame, we can sight a fair value gap here. This is a fair value gap. Price tapped into this fair value gap. The next thing we should be looking for is a break of market structure and a fair value gap still. So we have a fair value gap and we have a break of market structure here. And we also have a fair value gap here. So from this fair value gap, we should take it like this. Price coming down. If you are not going to use this fair value gap because the risk is actually too big, you can use your order block here. So using your order block, you will see a better risk reward ratio by entering this way, and your stop loss is right below this low that created that fair value gap, and your take profits here. Your take profit is about 2.62 risk to reward ratio, but you can see how your take profit could actually rally to this fair value gap here, just like so. The next thing we have is our number 10 trade. So this is our number 10 trade plays out. We have to go back to our 3-minute time frame. So on our 3-minute time frame, you can actually see our number 10 trade having a fair value gap here. We have a fair value gap here, and we have a break of market structure here. We also have a fair value gap created here. We have a fair value gap, a break of market structure, and prior to that break of market structure, we have a fair value gap at this spot. So this fair value gap is what we use for our entry to this high that created our fair value gap. For a short position, we'll put our entry here. We enter at this spot and we put our stop loss right above this high, and our take profit should be at the next low here. This should have given you a risk reward of 2.51 or here because of this fair value gap, and giving you a 2.89. And you can see how markets rally to the downside to take out all the remaining lows here up to this spot, giving you a risk reward of 9.42 risk to reward ratio here. So our number 11 trade, so this is our trade number 11 here on that same 3-minute time frame. You can see it here. We have a fair value gap here cited, and we have another fair value gap, and before that fair value gap we have a break of market structure here. The next thing we would look for is a fair value gap prior to that break of market structure here. So, and we'll put our short position like this for our entry. Our short position should be at the start of that fair value gap, and your stop loss should be here above this high that created that fair value gap. And the next thing is our take profit, which is here, 4.71 risk to reward ratio. This is how our take profit should be. So the next on the line is the next week trade. So we'll be projecting that there will be a bullish move on our next week trade. So let's go on to a higher time frame to have a clearer view. So let's go to our 15 minutes. So on our 15-minute time frame, you can see a fair value gap here, and we'll take it to where we have our price. So we have price taps into our fair value gap here and created for us a break of market structure here, and we have a fair value gap here. So I think we have for ourselves a trade for next week. So we should have a long position, that is if price taps into this fair value gap and does not create another bearish setup on our way. So we'll put our take profits here, probably before this fair value gap here. So this should be a risk reward of 4.11 ratio. So this should be our projection for the following week. Feel free to subscribe and comment down below. See you guys on our next episode on the trades you missed. Peace.